Welcome to Daily Crypto episode 27. We're taking a deep dive today, pulling together recent activity across the crypto landscape to, uncover the most important nuggets of knowledge and insight.
That's right.
Our mission is to cut through the noise, help you understand what's been happening, and maybe give you a clearer picture of this incredibly dynamic space.
It's really a snapshot of a particularly busy period. We're touching on everything from the foundational layer of price movements in the major assets,
Right.
all the way to specific project updates, the ever-present regulatory signals, and the newest emerging trends that are capturing attention.
We'll try to explore how these seemingly separate events, the stuff reported in the recent flow of information, how they connect and maybe influence each other.
Exactly, connecting the dots.
Okay, let's start with the raw numbers then, the market heartbeat, because that often sets the stage for everything else. Looking at the recent data, what's it telling us about how the big players have been moving?
Well, the data gives us a specific snapshot. Bitcoin, BTC, is noted at $105,686 and is showing a very slight positive change, just 0.2155%.
Tiny move.
Very tiny. Ethereum, ETH, comes in at $2,489.32, with a small negative change, actually, just over 1% down at negative 1.0915%.
Okay.
And BNB, often linked to, the Binance ecosystem, is around $649.11, also with a fractional decrease, magus 1.13621%.
So for the Titans, it's a bit of a mixed bag in this window, but generally stable, it sounds like. Not huge swings up or down in this particular moment.
Pretty much sideways, yeah.
What about some of the other significant layer one blockchains or, larger altcoins that people follow?
Sure. Further down the list, Solana, SOL, is reported at $150.91, and it's actually seeing a gain of 0.95042%.
Oh, interesting.
So that's a bit more positive compared to the slight dips in ETH and BNB. XRP is also listed at $2.24, showing a positive movement too, 0.96935%.
Okay.
So yeah, in this specific time frame, SOL and XRP showed a bit more upward momentum than the top three.
And the meme coin sector. Always a fascinating, often volatile corner. Some view it as a pulse on pure market sentiment or maybe speculative fervor. What do the numbers show there?
Yeah, the meme coin sector, as usual, displays a much wider range of movement. Shiba Inu, SHAB, is noted lower at 0.0000124 with a decrease of negatives 1.30826%.
Back down a bit.
And Pepe, PEPE, is also down slightly at 0.00011 feen, changing by negative 0.07355%. Very small move there.
Right.
However, this is where you see the contrast. Bonk, BONK, and Dogwoof Hat, WIF, both prominent on Solana, are showing pretty significant gains.
Oh, really?
Yeah, BONT is at 0.0000156 with a strong 2.347767% increase, and WIFF is at 0.359989, gaining 2.28711%.
So here's where it gets really interesting. You see that juxtaposition. Major coins like Bitcoin and Ethereum are relatively flat or slightly down, maybe consolidating or reacting to broader market forces. But then certain meme coins, often driven by specific narratives or, community hype, they're seeing notable upward movement in the exact same snapshot. It really highlights the diverse forces at play.
It does.
And how segmented the crypto market can be. Different assets, different sectors. They respond to different stimuli at different times.
Exactly. This initial market overview gives us a context of, let's say, relative stability for the large cap assets during this period, but, continued volatility and specific, often speculative narratives driving action, particularly in the altcoin and especially the meme coin sectors.
Right.
It reinforces the idea that you really can't paint the entire market with a single brush. Different segments have different dynamics, and this snapshot, well, it's just a starting point for understanding the underlying news and trends that might be influencing these varied movements.
Okay, let's take that starting point then and unpack some of the specific news items that likely contributed to or maybe reflected these market dynamics. We can start with updates from individual projects and protocols. That often gives us a glimpse into the health, challenges, and strategic moves happening, on the ground level.
Sounds good. One notable piece of news involves a Bitcoin capital markets platform called Avalon Labs. They took a significant action regarding their token, AVL. They burned 80 million AVL tokens.
80 million.
Yeah. Now, the report specifies this action slashed their circulating supply by a substantial 44%.
44% of the circulating supply removed. Wow, that's a huge figure.
It really is.
And for anyone maybe not completely familiar, burning tokens means permanently removing them from circulation, essentially destroying them.
Correct.
This is often done to create scarcity, right? With the idea that reducing the supply relative to demand could potentially increase the value of the remaining tokens.
That's the theory, yes.
So for Avalon Labs, this suggests a pretty deliberate move to influence the token's economics and maybe signal confidence in its future value by just reducing the available pool.
It certainly looks that way, a strong signal.
Okay, what about the less positive side of things? Security exploits. Unfortunately, they remain a persistent challenge in DeFi.
Yeah, unfortunately, security breaches are still a reality that industry grapples with. The information highlights two different protocols dealing with the aftermath of past incidents. Alex Protocol announced they have a reimbursement plan in place for users affected by an $8 million exploit.
$8 million, okay, so trying to make users whole.
An effort, yes, to restore user funds lost in that breach. Separately, and on a much, much larger scale, Cetus Protocol is reportedly relaunching. They have a new roadmap and also a compensation plan following a massive $223 million exploit.
Whoa, $223 million. That number is staggering.
It really is.
It's a stark reminder of the significant value at risk in these DeFi protocols. It just underscores the critical need for robust security audits, bug bounties, ongoing vigilance.
Absolutely essential.
The fact that these protocols are implementing reimbursement and compensation plans, even if it's probably a lengthy and complex process,
No doubt.
it shows a commitment, or at least an attempt, to recover and rebuild trust after such a major incident. But it also highlights the potential for substantial losses and the challenges users face when interacting with dApps.
It's a double-edged sword for sure.
Okay, moving from those specific protocol incidents to broader market perspectives and some of the bigger names in the space, what did the information report there?
Well, Cathie Wood, a prominent investor, known for ARK Invest and her often bullish views on disruptive tech, like crypto.
Yeah, definitely a well-known voice.
She was quoted predicting a significant long-term growth trajectory for Bitcoin. Her forecast is that Bitcoin's value will multiply 15 times in the next 5 years.
15 times. A 15x prediction from someone like Cathie Wood is certainly eye-catching.
It is.
That would put Bitcoin well over $1 million within that time frame. Now, obviously, these are forecasts, not guarantees. But such bold predictions from visible figures in, traditional finance circles, they reflect a strong conviction held by some about Bitcoin's long-term potential, maybe as a digital asset or store of value.
It definitely fuels enthusiasm among certain segments.
Yeah, keeps the conversation going about Bitcoin's upside. What about Ethereum? The second largest, which we saw was slightly down on the market snapshot earlier.
Right. The information notes an interesting trend for Ethereum. Its volatility appears to be narrowing.
Narrowing volatility.
Yeah, suggesting a period of potentially less dramatic price swings compared to maybe its historical movements or, the volatility we just saw in some of the smaller altcoins or meme coins.
Okay.
And this relative calming in volatility is reportedly linked to institutions continuing to double down on ETH.
Doubling down by institutions on Ethereum. It's a phrase that suggests increasing conviction, right? And investment from large traditional financial players.
Seems like it.
Why might narrowing volatility make ETH more attractive to institutions? I mean, traditional finance often prefers assets with lower volatility for portfolio management, risk assessment.
So it makes sense. Yes, less risk, more predictability.
So if institutions are indeed increasing their exposure, maybe through direct purchases, investment funds, or engaging with staking or DeFi on Ethereum, it signals growing mainstream comfort with and integration of ETH as an asset class.
It could be a significant long-term driver for Ethereum, similar perhaps to the narrative around institutional Bitcoin adoption we've seen.
Right. And Ripple, the company associated with XRP Ledger, what's happening there?
Ripple seems actively engaged in fostering its ecosystem. The information mentions they are providing grants to Japanese Web3 projects, specifically those building on the XRP Ledger.
Targeted grants.
Exactly. It demonstrates a focused effort to stimulate development and utility on their platform, but within a specific key geographic region, Japan. It's about cultivating builders and applications that can leverage the XRP Ledger's capabilities for things like, say, payments or asset tokenization, trying to increase fundamental usage.
Got it. Makes sense. We also saw mention of challenges faced by certain projects, even those with large user bases, like Pi Network. Seems like user experience and technical issues can still cause significant friction.
Yeah, the report highlights that Pi Network is facing some backlash from its community. Users are reportedly experiencing problems with missing tokens even after they've completed the Know Your Customer, the KYC process.
Which is standard identity verification.
Right. And even after migrating their accounts to the mainnet, the project's operational blockchain.
Ouch. So you do everything right, and the tokens aren't there.
Apparently, that's the issue being reported. It points to frustrating user-facing problems and potential technical glitches in what should really be a fundamental process of accessing your assets. For a project that's been in development for a long time, such issues can definitely erode user trust.
Yeah, and highlight the complexities of launching and managing these large-scale crypto networks.
For sure.
XRP also had a seemingly contradictory signal reported as well, which is something you often see in market analysis, different metrics telling different stories.
It certainly did. The information indicates that XRP is showing signs of a price rebound, which kind of aligns with the positive movement we saw in the initial market numbers.
Okay.
However, simultaneously, it notes declining on-chain activity.
Ah, the divergence.
Yeah.
Price up, activity down.
Exactly. That's a classic divergence market watchers pay close attention to. On-chain activity refers to the actual usage of the network transactions, transfers, smart contract interactions, that sort of thing.
Right, the fundamentals.
So, if the price is going up but the fundamental network usage is declining, it raises an important question. Is the price movement being driven by factors other than organic network growth and adoption?
Like pure speculation.
Could be speculation, could be exchange-based trading dynamics, or other external factors playing a larger role than actual utility on the ledger. This kind of divergence signals potential risks ahead if the price isn't supported by underlying usage growth.
Fascinating contrast there. Price resilience versus declining fundamental metrics.
Yeah.
It forces you to ask what's really driving the value. What about the broader market structure? How are external factors or the regulatory landscapes mentioned in the information influencing things?
Well, a notable point impacting the broader Bitcoin market structure is the observation that Bitcoin price stalled, partly because spot ETFs reportedly experienced outflows for a second consecutive week.
Ah, the ETFs again. Spot Bitcoin ETFs. Those are the investment vehicles in traditional finance that directly hold Bitcoin. So when they see outflows, meaning investors are selling shares in the ETF, the fund managers typically have to sell the underlying Bitcoin to meet those redemptions.
That's how it works.
So if these ETFs are seeing significant outflows for 2 weeks, as reported, it acts as selling pressure on Bitcoin itself, potentially creating a headwind for its price, even if other factors might be positive.
Exactly. It really highlights the growing influence of these institutional products on Bitcoin's price discovery and how flows in traditional markets can directly impact crypto.
Yeah, that connection is becoming clearer. The information also mentioned something called the PancakeSwap paradox. What's that about?
Yeah, that headline, Flipping Uniswap, Flopping on Price, PancakeSwap Paradox, is an interesting observation. It implies that PancakeSwap, the DEX, using the Cake token,
Right, major DEX.
might be gaining ground on key activity metrics relative to Uniswap UNI, perhaps in trading volume, number of users, market share on certain chains.
Okay, so doing well by some measures.
But this increase in activity isn't necessarily translating into positive price performance for its native token, Cake.
So more people or more volume on the platform, but the token price isn't following suit. That is a paradox. What might explain that?
Well, it highlights that platform activity and token price aren't always perfectly correlated, especially in the short term. Factors like tokenomics play a huge role.
What inflation?
Right. Is the Cake token inflationary, for example, with lots of new tokens being issued? Is there significant selling pressure from users earning tokens through farming or staking who then just sell them? Is the value generated by the platform activity effectively captured by the token itself?
Lots of potential reasons.
Exactly. The paradox suggests that while PancakeSwap might be seeing success in user adoption or volume, there could be underlying tokenomic or market structure reasons preventing that success from being reflected in the token's price performance. It's a good reminder that you need to look beyond just one metric.
Definitely. We often hear about whales, large holders or traders, having a significant influence on market movements. What did the information highlight about whale activity recently?
Whales were mentioned in several specific contexts, underscoring their continued impact. It was reported that whales are apparently losing their sweet tooth for syrup, which is the token for Maple Finance.
Losing interest in syrup.
Yeah, despite the platform itself showing growth. This suggests large holders of CIRF might be exiting their positions or losing conviction, even if the protocol is developing.
Interesting divergence there, too.
And whale selling was also explicitly cited as a reason why the price of Mask Network, MASK, experienced a significant pump, followed by a sharp dump.
The classic pump and dump.
Seems like large buyers pushed the price up and then large sellers took profits, crashing it down. And specifically regarding the Pepe coin plunge noted as a 36% drop from its May highs, this was explicitly linked to whale investors continuing to exit alongside broader market weakness.
So whale selling contributing significantly to that Pepe drop.
That's what was reported, yes.
Whale movements clearly remain a significant factor to watch, particularly in assets with maybe less liquidity, where a single large order can dramatically impact price. Their actions can sometimes signal shifts in sentiment among the largest market participants.
For sure.
And can certainly exacerbate volatility, especially in those pump-and-dump scenarios or periods of weakness like the Pepe example. Any interesting developments on the regulatory or institutional side beyond the ETFs and Gemini?
Yeah, a notable development from a major global economy involves Beijing. It's reported they have established their first formal process for liquidating confiscated cryptocurrencies.
Liquidating confiscated crypto. How are they doing it?
What's particularly interesting is how they are doing it by tapping into Hong Kong's licensed exchanges.
Using the Hong Kong regulated route. So a structured official approach to handling seized digital assets using a more crypto-friendly hub within their sphere of influence. What does that signal?
Well, it signals a level of official engagement with the reality of cryptocurrencies, even if it's in the context of enforcement and asset recovery, by creating a formal process and utilizing regulated entities in Hong Kong.
Right.
Beijing is acknowledging the need for a structured method to deal with seized digital assets, rather than simply ignoring or banning them outright. It feels like a pragmatic step that, while related to confiscation, implies a de facto recognition of crypto's presence and value.
Interesting angle. And on the corporate side, you mentioned Gemini earlier.
Yeah, Gemini Trustcom, the crypto exchange founded by the Winklevoss twins, has reportedly confidentially filed for an initial public offering, an IPO.
An IPO filing.
And the information links this move to regulatory pressure potentially easing.
Okay, an IPO for a major crypto exchange would be a significant event. Brings it onto traditional public markets, subject it to a different level of regulatory scrutiny, different investor base.
Big step.
And linking it to easing regulatory pressure suggests that maybe the environment in certain jurisdictions, perhaps the U.S., might be becoming more conducive for crypto companies to pursue these traditional financing and listing routes.
It could potentially pave the way for others seeking similar paths.
Right. The information also touched on the global regulatory picture in a large market like India.
Yeah.
What's the situation there?
Yeah, it was reported that India's crypto rules are still, well, in limbo, with the Reserve Bank of India, the RBI, reportedly having said no thanks to certain proposals or frameworks.
Still uncertain then.
Exactly. It highlights the continued uncertainty and cautious approach from central authorities in some very large potential markets. Regulatory clarity is something the industry globally seeks, obviously.
Of course.
And the situation in India shows that not all major economies are moving at the same pace or with the same level of enthusiasm. Regulatory ambiguity in a market that large can significantly impact potential adoption and investment there.
Definitely a key area to watch. Okay, stepping away from the major headlines and regulatory landscape for a moment, the information also highlighted some specific altcoin movements and broader trends, particularly the emergence and focus on new tokens.
Absolutely. Diving into specific altcoins, Internet Computer, ICP, reportedly managed to defy a broader crypto downturn with what was described as a caffeine-fueled rally and whale accumulation.
Caffeine-fueled. That paints a picture of a strong, rapid surge.
Doesn't it?
And coupled with whale accumulation.
Yeah, it suggests intense buying pressure specifically on ICP during a period when other assets might have been struggling. Whale accumulation indicates that large investors were actively buying, providing significant capital support for that rally.
So specific factors driving interest in ICP then. Project news, tech developments, a narrative maybe?
Could be any of those, allowing it to decouple from broader market weakness during that time frame.
Interesting. Solana, SOL, continues to be a major focus for many traders and developers given its ecosystem growth. What did the information report about SOL's trajectory?
The information notes that Solana indicators are pointing north, with bulls specifically testing a $165 target.
Ah, technical analysis view.
Yes, suggesting that based on chart patterns, price trends, other technical signals, the momentum is positive, and analysts are watching that specific price level, $165, as a potential resistance point or maybe a near-term goal.
Okay, that aligns with the positive price movement we saw in the initial snapshot and reflects some confidence among traders in SLL's near-term potential.
Seems that way.
And Avalanche, AVAX, another significant Layer 1 competitor.
Avalanche is reported to be gaining momentum, particularly highlighting a massive surge in monthly transactions, a 326% increase.
Wow, 326% transaction growth. That's huge.
Huge growth in underlying network activity, yeah.
Ah.
Suggests strong user adoption and application usage on the Avalanche chain. However,
There's always a however.
right, the report also adds a cautionary note mentioning that a specific chart signals a cold front.
A cold front, despite soaring transaction numbers. That sounds like the ABX version of the pancake swap paradox or the XRP divergence we talked about.
Exactly, fundamental strength conflicting with potential price signals.
So what does a cold front mean in charting?
Well, it might refer to technical indicators suggesting slowing momentum, potential resistance, or even maybe bearish divergence where the price isn't keeping pace with that fundamental growth.
Okay.
It just highlights the complexity of market analysis again. Strong on-chain fundamentals like transaction growth are generally positive long-term indicators, but short-term price action can be influenced by different factors: market sentiment, technical trading patterns, profit-taking.
Right, multiple forces at play. Reinforces the need to look at multiple indicators and perspectives.
Definitely.
Cardano, ADA, was also mentioned. And similar to XRP, there was a cautionary note linked to network activity.
Yes, Cardano's price is reportedly facing downside risk amid weak network activity. This is a direct contrast to Avalanche's reported transaction surge. And it reinforces the idea that for many analysts and investors, the health and growth of a blockchain's ecosystem, reflected in on-chain usage, is a key driver of long-term value. Weak activity metrics can signal less organic demand for the network services or the ADA token itself, potentially putting downward pressure on the price, especially in periods of broader market weakness.
Makes sense. Now, we saw many mentions, particularly within sections that seemed like sponsored or partner content, about new coins and pre-sales. Well, we're definitely not endorsing specific projects here.
No, absolutely not.
The sheer prominence and framing of these stories tell us a lot about where market attention and capital are flowing and maybe the narratives being pushed.
It absolutely does. The prevalence of stories about new projects launching via pre-sales or initial coin offerings, ICOs, indicates significant activity and, well, investor appetite in the realm of finding the next big thing.
Yeah, that search is always on.
You see frequent reports about new AI coins like Lightchain AI reaching specific funding milestones, $2 raised, entering stage 3 ICO, things like that, or being discussed alongside established coins like BNB, ADA, and Solana in headlines, positioning them as potential competitors or alternatives.
Right.
Mentions of specific pre-sales like Punisher Coin or NextChain raising millions, 3.08 miners for NextChain was mentioned, are common.
It really feels like there's a strong narrative being promoted around getting in early on potential disruptors or coins, riding hot trends like AI. Based on the headlines, we saw things like 80 competitor below $1 or new DeFi coin outperforming.
Precisely. The themes strongly highlighted include AI integration, which is obviously a massive trend across all tech right now.
Huge.
DeFi alternatives, suggesting the search for better yields or novel mechanisms, and of course, meme coin potential. There were mentions of new viral meme coins like Cori alongside the ongoing buzz around established ones like Pepe, Bonk, WIF, and Popcat that we saw in the price movements earlier.
Right.
The prominence of these stories, especially in what looks like promotional content, reflects where a significant amount of speculative capital and marketing effort is currently focused. It's a high-risk, high-reward segment of the market, characterized by rapid launches and sensitivity to hype, and pre-sales are a popular mechanism for projects to raise initial funds directly from the public.
Yeah, definitely a distinct corner of the market. Now, the information also included a Learn section, which is crucial for anyone trying to navigate this space. What were some of the foundational concepts covered there?
Yeah, that section seemed dedicated to building understanding of various crypto topics. One article delved into the fascinating concept of AI for crypto prediction, exploring whether artificial intelligence can genuinely be used to forecast volatile crypto markets, or if it's more theoretical, maybe even mythical.
Highly relevant. Given the AI trend we just discussed with new tokens, people are definitely curious if AI offers an edge in predicting price movements. What else did this learning section cover?
There was an explanation of wrapped steth, which is a key derivative in the Ethereum ecosystem. Steth itself is a liquid staking token representing staked Ethereum.
Right, from Lido mostly.
Exactly, and wrapping it into Resteth makes it more compatible with various decentralized finance protocols. Understanding these derivatives is increasingly important for participating in DeFi. Another piece offered an overview of Koti, a specific project covering its technology, token, and market impact, essentially a mini deep dive into one altcoin's fundamentals.
So resources for understanding both specific technical concepts within DeFi and individual projects. And for people just getting started with investing, was there anything for them?
Absolutely. Accessibility is key for newcomers. There was a beginner's guide to investing specifically in Bitcoin, providing entry-level advice for someone looking to make their first allocation to the largest crypto asset.
Good starting point.
And crucially, there was also a guide titled, What is a Crypto Presale? This directly ties into the trend we just discussed. It explains the mechanism behind token presales, how they work, the different stages projects might go through, what participants should understand. It helps potential investors understand the mechanics of trying to get in on a new project early.
That's useful context given all the pre-sale news. And a bit of crypto culture thrown in too.
Yes, recognizing the unique language of the community, it included an explanation of degen in crypto, covering common crypto slang terms.
Ah, the BGens.
Right. Understanding terms like degen, which often refers to someone who engages in high-risk, speculative trading or yield farming, helps you better understand online discussions, articles, and the culture prevalent in certain parts of the crypto world.
Yeah, you need to know the lingo sometimes.
So that learning section seems valuable because it covers the technical, the project-specific, the investment basics, and even the cultural aspects you need to navigate the space.
Definitely helpful. Okay, beyond the market charts, news headlines, and educational resources, the information also listed upcoming industry events and included some broader market perspectives and opinion pieces. What about events?
Yeah, industry events are crucial for networking, fostering collaboration, and signaling the industry's priorities. The press releases highlighted several upcoming gatherings. These included UEX Capital Corp's inaugural institutional crypto event,
Okay, institutions again.
signaling the continued focus on attracting traditional finance. The 15th anniversary Blockchain Life Forum happening in Dubai in October 2025. That's a major, long-running global conference. Proof of Talk announcing prominent speakers like Barry Silbert, Kathy Wood, whose prediction we discussed,
Cool.
and Stani Kulishov for their conference, adding some star power. And global events like Weybit 2025 and Sophia and Sigma Asia 2025 kicking off in Manila, indicating the industry's international reach and continued expansion efforts.
That's a truly global calendar of conferences. Indicates the industry's maturity, maybe, and its continued effort to bring together builders, investors, regulators from around the world.
It shows confidence in the future, I think, and the importance placed on in-person connection and knowledge sharing.
Yeah.
It provides a forward-looking view of the industry's focus areas and geographic presence. The information also included several opinion pieces offering broader commentary and sometimes provocative takes on key themes.
Like the one questioning AI's impact on crypto.
Yes, an opinion piece debated whether AI could destroy crypto within 5 years. Now, while perhaps intended to be attention-grabbing,
A bit clickbaity.
maybe, but it reflects ongoing discussions about how rapidly evolving technologies like AI might intersect with and potentially disrupt or fundamentally change the crypto landscape. It's a speculative but interesting question about the future technological interplay. Another piece questioned whether corporate or national treasuries stacking Bitcoin is a PR gimmick or solid strategy.
Ah, bringing in the traditional finance angle again. Are these moves by companies or countries to hold Bitcoin on their balance sheets a genuine strategic decision, asset diversification, inflation hedge, or is it primarily a marketing or public relations play?
It's a valid question as more traditional entities consider Bitcoin exposure.
And there was a piece on a foundational philosophical concept in crypto trust.
Yes, there was an opinion piece asserting that trustless is not the same as trustworthy.
Ooh, that's a good one.
It goes to the heart of blockchain's promise, right?
Mm-hmm.
Creating trustless systems where you don't need to rely on a central authority or intermediary. However, the piece likely argued that while the system can be trustless, the people involved in projects, the developers writing the code, the operators of dApps, even the community participants still require a degree of trustworthiness.
Right. The code executes as written. That's the trustless part.
Exactly. But if the code itself is malicious or flawed, i.e. not trustworthy, the technical trustlessness doesn't protect you. It's a crucial distinction reminding us that while technology can eliminate the need for trust in certain intermediaries, human integrity and project execution remain vital aspects of assessing risk in the ecosystem.
That is a really important point that gets overlooked sometimes. It's not just about the tech, it's about the implementation and the people behind it. The information also touched on how external traditional market factors and even social political events can spill over into crypto.
Yeah, it noted that the Dow Jones, a major traditional stock market index, jumped 443 points on strong labor data. This shows how significant traditional financial news and macroeconomic indicators like employment reports are still reported alongside crypto news. It implies there can be interconnectedness or sentiment spillover effects between traditional markets and crypto, even if crypto is also driven by its own unique catalysts.
And unfortunately, the information also reported on how significant external drama, specifically mentioning the fallout between Elon Musk and Donald Trump,
Right, that was in there.
reportedly had a rapid and notable impact on the market and specific meme coins.
It did. Reporting a $170 market crash as Bitcoin drops and 950 meters in longs are liquidated fast, reportedly tied to this specific external political social event.
Wow. That connection is fascinating and kind of concerning.
It really highlights how high-profile events involving influential public figures, even if seemingly unrelated to crypto fundamentals, can trigger significant volatility. What likely happens is such news creates uncertainty or triggers shifts in sentiment,
Right.
which in highly leveraged markets can lead to cascading liquidations. If traders have open long positions, betting prices will go up with borrowed funds.
Leverage.
A sudden price drop can force their positions to be automatically closed, liquidated,
Yeah.
which involves selling the underlying assets, further driving prices down and potentially triggering more liquidations.
A domino effect.
Exactly. This chain reaction can happen extremely quickly and cause massive market crashes, as reportedly seen here. It underscores how sensitive parts of the crypto market, particularly leveraged derivatives, are to unexpected news and sentiment shifts, even those originating outside the typical crypto sphere.
So putting this all together, what does it all mean? Looking at the full picture presented in the information we've explored today, from the minute price movements and specific project news to the sweeping regulatory signals and broader market commentary, it just paints a picture of a market that is incredibly active, constantly evolving,
Definitely.
and influenced by a really complex interplay of forces, both internal and external.
Yeah, we see signs of increasing maturity and mainstream integration, right? Like institutional steps forward, Gemini's IPO filing, reported institutional interest in Ethereum suggesting growing comfort from traditional finance. But alongside this, we see significant persistent challenges, like ongoing exploits leading to huge financial losses and the complex, often insufficient efforts to compensate users.
The good and the bad, side by side.
Exactly. Regulatory uncertainty continues to be a factor in key regions like India, while other jurisdictions like Beijing are formalizing processes that acknowledge crypto's reality, even if it's for enforcement. There's continued activity and consolidation in major assets like Bitcoin and Ethereum, but also dynamic, often volatile, movement in altcoins and meme coins, frequently driven by specific narratives, technical trends, or the actions of those whales we talked about.
Right.
And the constant innovation and rapid pace of launches are clear, represented by that prominent focus on new projects and pre-sales, particularly in trending sectors like AI.
And all of this is overlaid with those external factors we discussed, from macroeconomic indicators in traditional markets potentially spilling over to crypto sentiment, to major social or political events reportedly having rapid and significant impacts on market volatility and liquidations. It's not just about the crypto itself, it's increasingly influenced by the world around it. It's all hot to keep track of, and it highlights how interconnected everything has become.
It really does. It underscores the multifaceted nature of understanding this space. You really can't just look at one type of news or one set of prices or one technical chart. A truly informed perspective requires considering technology development, security risks, evolving regulatory landscapes across different countries, market sentiment among diverse groups of investors, and even broader global events that can suddenly inject volatility. Yeah. Each piece of information adds a layer to the overall, often contradictory picture.
That's the beauty and maybe the challenge of doing a deep dive like this, seeing how these different pieces of information connect, influence each other, or sometimes, surprisingly, seem disconnected from each other in the short term. So, based on everything we've explored from this recent flow of information today, here's a final thought for you, the listener, to consider. Given this complex mix of increasing institutional adoption and perceived maturity, alongside persistent security challenges, regulatory hurdles, and the rapid emergence of new, often speculative, tokens and trends, how do you, as you navigate this space, assess and balance the significant potential for growth against the ever-present risks in the current crypto market environment?
It's a crucial question, weighing all those different, sometimes conflicting factors.
Definitely something to think about.
Well, we've covered a lot of ground in this deep dive, pulling together insights from the recent activity across market movements, key news stories, emerging trends, and those educational points.
Yeah, exploring this information together hopefully gives us all a more informed perspective than just glancing at headlines.
Absolutely, it helps connect the dots.
Thanks for joining us for this deep dive.